Welcome everyone on behalf of the MGAA. For anyone who's not attended one of these recently and had the pleasure of listening to my housekeeping and my introduction. So I'm Alison Cairns. I'm going to run through a few housekeeping bits and pieces, and then we won't delay any further, and I'll hand over to Chris to run the market briefing. So yes, quick bits of housekeeping. First thing to let you know, we are recording the session. Big positive for that is that if you want to review anything at a later date, you want to pass it on to a colleague to have a look at the session. We will make the link available both in our member area and on our YouTube channel. That should be with you early next week, and together with that, you'll have copies of the slides as well. So just to let you know that, polite request, please, can we not have cameras, which I think at the moment everyone is off camera, and no microphones. It just helps with the technology side and also editing the recording afterwards, keeps it nice and clean. The other request is to please not to activate or use any AI note-taking, I don't know what the correct word is, devices, because they do require permission, which we haven't got from the audience. So if anyone has activated any of those, if you could deactivate them, please, that would be appreciated. A few other quick things to mention. Our market briefings are accredited by the CII for CPD purposes, so please do use this session to record on your CPD if it is relevant to your development. One very last thing to mention is that if you have questions as we go through, if you add them onto the chat, we can cover them off at the end. So I think without further delay, I will hand over to Chris Lee-Smith from Accelerant, who will introduce himself and also deliver our market briefing on enhancing specialty insurance through data analytics, AI and expert insights. So over to you, Chris.
Thanks, Alison. Appreciate it. And thanks everyone for joining today. I plan to spend the next sort of 30, 40 minutes talking about the specialty insurance market, and I suppose the new approach that we have to the specialty insurance marketplace, and specifically using data and analytics, AI and insights really to help members, or MGAs should I say, grow profitably. So with that, I'll give you a little bit of my background. You don't have to read it. So the summary is started in reinsurance, spent some time in wholesale, then in retail, predominantly at Marsh, Guy Carpenter, Willis and Aon. So I've got the full bingo card when it comes to major distributors, and then latterly at Argo. I surprised myself when I calculated how many years I've been in the industry. So I think I'm coming up to 38 years now. And during that time, I've built a number of MGAs, bought some stuff, sold some stuff, run a number of P&Ls, undertaking a bunch of technology-based transformation projects. I suppose some of those went well, some of them didn't go so well. But I suppose if there's a common theme running through all of my time in the industry, it would be really the lack of high quality, high fidelity, homogeneous data really to make decisions on. And that's one of the key things that I think we as an industry need to fix. And one of the things that really is part of the risk exchange platform that we've developed, we're looking to really solve for. I've been lucky to work in most parts of the insurance value chain. I suppose that allows, sort of brought me to here really. So that's a little bit about me. Why don't we jump into the agenda today? So I'm going to talk about the approach to specialty insurance market that we take, how we accelerate member success, and how we're really using data and AI and the platform to help our members grow, or the MGAs grow. As I said, I'll try and keep this to 30 to 40 minutes. I'm sure you get bored of hearing my voice after that length of time, and open up some questions right at the end. There are some learning objectives for the session. They're on screen now. Hopefully you can see them. And let's move into Oh yeah, sorry. I should just also mention this is the first of three briefing sessions that we're running for the MGAA. There is another one, a deep dive into data analytics and AI. So I'm going to touch on some of those subjects today. And on the 15th of July, some of my colleagues will be going into more detail than I cover. And then the third one we're doing is in September, which is a deep dive into what we call member services. That probably requires a bit of explanation as to what member services is. So members are MGAs who are part of the risk exchange, and we look to provide a series of services to our members. They take a whole variety of different forms. So whether that's legal and regulatory updates, whether that's access to discounts for services they might use. I think we've got about 180 partners on the platform now providing discounts to our members. I know that saved our members quite a bit of money over the years, with millions of pounds. So discounts in things like policy management systems, legal services, compliance, marketing services, cybersecurity, just fees. So all of those we get discounts for our members. We also do access to training packages, actuarial and pricing services, investment services. So if they have a business case they're looking to progress, we're happy to help finance that. And we also have a technology operating partner who's there to really help our members with making technology decisions, which can often be complex, either the contract negotiations. But I don't want to take steal too much of the thunder for member services. Adam Masiado, I think, will probably be delivering that one. But I just wanted to give you a context as to what it is to make it a bit clearer as to what that market briefing was going to be about. Okay, so let's get on to the content for today, really. So this is the new approach to specialty insurance. And I suppose I'll open up with a sort of interesting fact just about Accelerant and our data set so far. So we've consumed about 41 million rows of data that contains about 18,000 unique data attributes. We ingest about 1.4 million rows of data each month. And really the core of the model really is to ensure that every bit of data that we get, we turn into insights, and we're able to share with everyone in the value chain, from our members all the way through to risk capital partners. We also augment that data with third-party data sources, and that's really what provides you with the insights. We call it being aggressively transparent with all parties. And it's very difficult to do that unless you have homogeneous standard data sets that you can run these models against. So let's move on to the next slide, which really, I'm sure you're all familiar with this. This is sort of a rudimentary picture of the insurance value chain. One side of the picture, you've got the insureds, and at the far side, you've really got the capital that supports the specialty insurance market. Just talking through that, I'm sure you're all familiar. We've got the retail broker. 95% of all of our business comes through a retail broker, who's obviously there to advise the customer on the best product, the best pricing for the coverage that they're looking for. They'll often go to either a wholesale broker or or who's got a particular product that they can distribute through, or they'll go to an MGA. The MGA will then go to an MGA broker who obviously seeks coverage for them for that particular product or a series of products, and they'll go to an insurer. That insurer will then use a reinsurance broker to offset their risk, and then eventually that lands on the balance sheet of a reinsurer. So I'm sure you're all familiar with this value chain. It's complex. There's lots of mouths to feed in that particular value chain. And I suppose what you look at it when you see it is lots of duplicative costs, pretty brittle relationships. So an MGA may, or a member may have a relationship with a particular insurer for a particular product that's then reinsured through a particular reinsurer. That's often the case in some of the models we see. Those relationships can break pretty quickly. Either someone gets bought by someone else or someone moves on. So yeah, pretty brittle relationships, lots of conflicts of interest. People in this value chain are representing other parties, facing one way on some occasions and facing the other on others. So yeah, conflicts of interest all over the place, I would say. And I suppose the most important thing from our perspective is extreme data loss. So the data that gets captured by the retail broker that they've got through from the insured, by the time it actually manages to work its way through to the reinsurer, I think probably 95% of the data has disappeared. And in terms of data integrity that's left for it, I think you'd probably ask whether there was much integrity left in that data as it's flowed through the system. So that those are the things that we're sort of looking to solve for, which is a highly complicated a value chain that really doesn't facilitate the use of data in an effective way, we would argue. So what we've tried to do at Accelerant is, in this new specialty insurance marketplace we're developing, is really create what we kind of call a two-sided marketplace, which is the risk exchange. So on one side, you have the suppliers of risk. So these are typically the members, so our MGAs who are providing high quality risks into the model. We in turn provide them with long-term predictable capacity to help them support their growth ambitions in their portfolio. That sits on the risk exchange, which has a series of data analytics and AI tools, and I'll describe some of those later in the presentation about what they are and how they function. That sits on this digital platform, and we wrap around that expert service model. So a team of people that work with our members to help both grow the portfolio and to manage the profitability and to ideally produce profit for the member themselves. And then on the far right-hand side of the model, we have the demand side. So this is risk capital partners, that they take the form of insurers, reinsurers, and institutional investors. So they're the ones actually putting their money in, along with us, to support the portfolio. And what we give to them is a curated portfolio of highly validated, hopefully well-performing portfolios. And that's really sitting on what we have developed, which is a proprietary technology platform. And that ultimately, we believe, provides differentiated underwriting results to our members and all our risk capital partners. We have about, I think last time I counted, we've got about 120 engineers who are developing this platform for us. So, quite a lot of work has gone into pull this thing together. To give you a bit of stats on the platform itself and how that specialty insurance market works, we've got around about 220 members, so that's MGAs. We write about 3 billion of premium. That was just over that in 2024. I suspect 25 will be probably around about the 4 billion plus mark. We've got about 500 specialty products written across 22 different countries. And I suppose, really importantly, 90 different risk capital partners. So 90 different insurers, reinsurers, investors who are providing capital into the model. So quite a lot of diversification there. What does that deliver to our members? I would call pretty spectacular 39% year-on-year revenue growth by our members. That's been pretty consistent since we started. So phenomenal growth for our members. We've launched in 2024 over 130 products with our members. One of the good things about MGAs is their ability to be agile and get product to market quickly. We're super enthusiastic about that, and our average product to market lifetime is around about 14 weeks. So sometimes we do it in 10, but we work closely with our members to get products to market quickly so they can seize the opportunity where they exist. On the platform, we have 8 insurance carriers. So that's Accelerant. We have 8 insurance carriers, and we have 13 other insurance carriers sitting on the platform. So 20 plus in total, 21 in total. the platform generates around about a 50% loss ratio, and we have a less than 1% churn rate across the portfolio. So we lose less than 1% of our members. Most of the members that we lose tend to be down to acquisition. So the member has been bought by someone, normally an insurance company, and obviously no longer need our paper or our risk exchange partners to help them. So yeah, high level of retention across our membership base. So that's just recapping. So that's really that revised model. I think it's probably worthwhile at this stage just talking a little bit about what we look for in terms of members. So what is it that's on the platform? What trades on the platform? So giving you a bit of a sense of that. We've turned away in the region of about 17 billion of premium to date. So we are very selective about what we put into the portfolio. And it really comes down to the principles of best-in-class underwriters and an underwriting-led approach. From a member perspective, these aren't always the case, but generally, what's on the platform is members who have got a relatively low loss ratio. So, but I suppose more importantly, a 3 to 5 year track record of that. Predominantly commercial SME business. General limits are around about 10 million, although we do actually go up to around 40 to 50 million on some lines of business. Annual gross written premium somewhere between 3 and 100 million. Most importantly, an underwriting-led business. So underwriting is at the core of what they do. 10 to 100 employees, privately held, although that's not always the case. But as I say, not all of these things will work through exactly. But I suppose a key also is the digital data capture. So we're able to capture the information and use that effectively across the risk exchange for the member to allow the insights and opportunities to be identified. And of course, as you'd expect, we go through a fairly extensive due diligence process. So what's our core here? Our core here really is to empower members to focus on really what they do best, which is sourcing and underwriting business. How do we help our members from what we'd call the traditional marketplace? Well, we've talked about the data and the analytics. So I think unparalleled data transparency. We provide great insights into the members' portfolio and how they can grow their business with the data that we can give to our members. I think that's a unique proposition that's available in the marketplace. We look at the portfolio, so we tend to support our members as much as we can. So that's writing as many products as we possibly can. Rather than individual products, we look to try and write as much as we can for that particular member. I've touched already on the 5-year capacity commitment. We're an AM Best A- rated insurance carrier. We sign long-term agreements with our members, and that's a softer side of the model with the risk exchange. It allows our members to really focus on doing what they're really good at, which is sourcing and underwriting and selecting high quality risks, rather than worry about each year, where's the capacity going to come from? Will that particular carrier still support me? Will that binder still be functioning next year? Will someone be bought by someone else and I've lost my capacity and therefore can't support my product anymore? If you take their focus away from all of that and focus it purely on driving the business, that's why I think you see that 39% growth, because our members have the ability really just to focus on really what's important to them, which is growing their top line and managing the portfolio's profitability. It's a conflict-free model because we don't have a policy management system. We couldn't issue a policy if we wanted to. It's all done for our members, so we have no conflict of interest when it comes to distribution. And I'd like to think that we're entrepreneurial. We're able to respond to emerging opportunities with our member, hence the 130 plus products that have been brought to market over the last year. And that's something we're sort of really proud of. Risk exchange insurers. So I mentioned earlier, we've got a whole bunch of risk exchange insurers and capital that's been brought to the risk exchange, and that really allows our members to access a whole variety of insurers with slightly different appetites, but try to really support the member as much as we can in terms of the legitimate opportunities that make sense to pursue. And I suppose the other one pull out there really is reinsurance stability. Our members don't have to worry about reinsurance market and the reinsurance contracts. They leverage the value of the whole overall portfolio to keep the solidity and the performance working really well. So it takes away that fragility of the market that really exists today for MGAs. So that's why members function on the platform. Some of the ongoing monitoring. So we have every member, every MGA has a dedicated team. That team is made up of relationship managers, actuaries, claims people, underwriting, and that dedicated team is there really to focus on how do they help the member grow, how do they help the MGA grow, how do they help it grow profitably, and using the technology to do that. So using the tech and the data and the insights that get created to identify things that might be not going quite according to plan. We talk about style drift a little, where the portfolio is moving from a particular style to another, whether that's limits have increased or decreased, or whether that's the mix of the portfolio is moving around. Is that conscious choice? Has that happened because of circumstance? Why is it happening, and where are the opportunities really? We have monthly calls with our members. Really, that's that multidisciplined team, and we've built in some real-time compliance oversight, so automated checks using the technology to do real-time compliance checks, as well as the usual audit function that's performed on members as well. Although we've introduced some AI and tech. I'll talk about that later to help with the oversight and auditing process as well. As something I'm hugely proud of, and the team I know are as well, which is the NPS score. So we have a regular NPS score in the high 80s, early 90s. NPS is Net Promoter Score, but for those who aren't familiar with it, it's a calculation around promoters, passives, and detractors. What you see here is an example of the marketplace. So US fronting carriers typically get a -7 Net Promoter Score. Lloyd's, I think this is their 23 number, had a Net Promoter Score of 20, and I'm super proud of the fact that we get to 89. That's industry leading. So our members really appreciate what they get from the platform, and really appreciate what they get from the services, and that whole specialty market, the specialty market model that we've created has allowed our members to be super successful, which is great to see. Just to give you a bit of a feel for some of the products that we write. I won't dwell too long on those, but some of the styles of things that we write in the UK. And then the next slide is, if you notice it changed, it's similar sort of products, but for the EU. Okay, and finally, I'll just obviously say there's a whole bunch of governance around product oversight and consumer duty that's built into the model as well. So let's talk about the digital platform and the approach to data and how AI is changing what we're doing. I've showed you this previously. So this is the supply side of the risk and the demand side and the platform that sits in the middle. I thought it would be helpful at least to show you some of the output from the platform. I'm not going to go into detail of that, but before I do that, I suppose I'll give you a sense as to how we manage the data. So the data coming in from our members and TPAs. So the general strategy for us is we pull in all of the data that we can from our members. So that's obviously bordereau data, that's claims data, that's exposure data. So everything we can get hold of from our members, we try to pull into the system. That results in thousands of transactions or thousands of bordereaux and exposure data content being provided to us. That translates into hundreds of thousands of data fields, and all of that works its way through essentially our ingestion engine, which absorbs all of that data into a series of homogeneous tables. We supplement that with third-party data. We've got third-party benchmarking. We've got some API source data, and we run a series of AI tools against all of this that helps us validate it. So it keeps the data with high levels of integrity. So high fidelity data essentially ends up on the platform, and you can see from this the validations that we run and the issues that we identify with the data coming through the model. The key here is that no data gets left behind. We take on all the exposure data that we can. We take on all of the bordereau data that we can. We ensure the integrity of that information. And that's the key, really, to be able to start using it effectively. So until you can get the data in a consistent source, you can't really use it effectively. It has to be in a homogeneous style against all of the product sets. You think about all the different products we write. You need to be able to do it against all of those different product sets, which is why we end up with this, 18,000 unique data attributes, 41 million rows of data, 600 product mappings, and we ingest, I think it's about 1.4 million rows every month. That increases the data sets that we have, and obviously improves the quality of the insights and the outputs you can create from all of that. I thought I'd just flash up a couple of the dashboards that our members get. So from all of that data that comes in, what that enables us to do is to play back a huge amount of information to our members and allow them and the teams to really analyze that. So, whether that's by product, by individual account, by geographical location, by individual distributor or retailer, some things really simple, like a particular retailer or a particular producing broker is particularly good at this particular product. The loss ratio that they're providing for that particular product is superior to a whole bunch of other producers who aren't producing quite the same style of portfolio, and obviously that allows our members to focus on a particular distributor and double down on that opportunity. So something as simple as that you can get from the data sets. But this is just an example of a couple of the insights and dashboards that can be created, and allows the member really a significant amount of what I consider to be, slicing and dicing and analytics on the portfolio to really understand where's driving profitability, what's driving the claims, and how to really focus their efforts on getting better and better quality business onto the portfolio. Talking about AI, and part of this is think about how now we have the data sets, now you've got the information available to you. How could you leverage AI to generate better outcomes? We think about it in three different domains, really. The first one being AI on the platform. So I've touched on this a little bit when I said, as we ingest all the data, we've got a series of AI models that run against the ingestion data to ensure accuracy, completeness, and identify anomalies that can be corrected before the data lands onto the platform. So that creates better outcomes for our members, and a more efficient process, really, for absorbing all the data in from our members. The second one looks at what we call insurance intelligence. So this is a series of proprietary P&C models that have been developed to identify particular changes that we can make to the portfolio, or particular changes we can make to a particular account, and improve its profitability overall. And again, I think I've got an example in a couple of slides where I'll go into some detail as to how we've actually applied it to a particular member. But these three buckets all function differently, right? So one is against the totality of the platform. The second one is really targeted at particular products or a particular member or a particular product line. And then running either large language models or AI models against the data sets. And then the third one, which is something that I think applies to everyone, really, is using AI to enhance workflows across your own businesses. So there are tasks, activities that have been done today where AI can really simplify that process or make it much more efficient than is currently the case. So we put them into these three buckets. And maybe to make it real, let's talk about let's talk about some examples of how that's really been applied. So yeah, and I suppose just another context slide around AI. In our heads, it's not around cost cutting at all. It's really about just redefining how work is being done. So it's about avoiding costs and therefore not necessarily having to add more and more headcount to solve particular challenges. It's about increasing productivity of the team and also redefining work to make it more enjoyable and take out some of those mundane tasks, which some bits of AI can do really easily. And again, I've got a kind of example of how that can apply to how it applied to us, and I'm sure how it can apply to many of you as well. So let's get into a couple of the examples, really. So this is an example of a member where we applied the risk indexing to the portfolio, and as a result of that risk indexing process, we've seen a 5.3% improvement in their gross loss ratio. The risk indexing has allowed us to have a much smarter risk selection. It's powered by an AI scoring model that's been defined for that member. So this is being developed specifically for that member based on their portfolio and some of the learnings that we get from that portfolio. The work has ended up obviously with a lot of collaboration between us, taking the loss data that we've got, the member data we've got, third-party insights, and then pointing them towards opportunities. I mean, this particular one, just as an example of some of the stuff that came out of the analytics, was around liability claims, and I think this was a correlation between the claims we were seeing in areas where there was a high density of public houses, actually. So the more public houses within a small, these were I think more deprived areas. The more public houses there were in a condensed area, and low deprived areas had a much higher frequency of liability claims. Now you would say that's not surprising. The question is, how do you action that, right? How do you ensure that your selection of the risk and your pricing builds that into the opportunities that you see come through your distribution? And that's really what the indexing is doing. It's taking that data, correlating it, and giving the member a risk indexing to be able to essentially price the policy much more effectively, and obviously ultimately improve the profitability of the portfolio. That took about 3 months for us to work through that example. And we've seen a 5.3%, as I say, overall improvement in the loss ratio of that particular member. But the core of it is having the data sets in the first place. The second one is an example of where we've applied it at the organizational level. So this is an example of using the claims data to help identify probability of recovery, so subrogation on losses. So we've got an AI model that runs against the data set that identifies or is able to predict essentially loss recovery or more likely loss recovery or subrogation. So the large language model applies to the data set. It identifies based on a series of words and criteria where we think recoveries can be more effective. We then produce output from that, and then that gets given to the claims teams and to the legal panels to focus on the recoveries which are more likely to turn into actual recoveries rather than expected recoveries. That's been running for probably about 6 to 9 months now. And we've seen $150 million of savings as a result of that model being applied. So again, another example of how we've applied use the data sets. We've applied in this case a large language model technology to run through the data sets, identify opportunities, actionable opportunities that have then resulted in an improved outcome for both us actually and risk exchange insurer partners and most importantly for our members. So this is a short video of how we've used it from an internal perspective. So how we've used AI, and in this case, I've just shown you where we apply it to underwriting audits. So I'm going to show you this short video, which hopefully will give you a sense as to how you can apply it to your own worlds. You've used it on underwriting audits, but let me just play the video and you can see how it's been used.
At Accelerant, we're using AI to make underwriting audits faster, smarter, and more transparent for our members. Here, you're seeing a live example of how our audit process works. We start with a variety of files, emails, attachments, scans, PDFs. No need to reformat or organize them. Our AI reads and understands unstructured documents in any format or language. Now we're typing in a typical audit question. Does underwriting comply with the subsidence peril rules in the underwriting guide? In moments, the AI provides a detailed response, drawing clear links between the guidance and what actually happened. What makes this powerful is how it supports the auditor. Every answer is backed up with references, clearly highlighted and linked so the auditor can instantly validate each point. Here, for example, the system jumps straight to the relevant section in the underwriting guide. No scrolling through 75 pages. And while AI speeds things up, final judgment always rests with our auditors. This is AI as it should be, an assistant, not a decision maker. Our goal is simple: make audits smoother, more helpful, and a real tool for learning and progress.
Okay, so hopefully that gives you a sense as to how, again, just an example of how we've used AI to improve a particular process. I mean, there are lots of these, obviously, internally in terms of workflows that you can apply. So going back to that core principle of AI, it's around how do you use it at the enterprise level, how do you target it very specifically at member-specific problems, and then how do you use it to improve just general workflow activities. And we think there's a long way still to go in terms of improvements that can be made in that space. So that's the end of the presentation. I've taken, unfortunately, the full 41 minutes, so you've heard my voice for longer than I was hoping for. Hopefully that gives you, just to summarize, gives you a sense of how the specialty marketplace we think is changing, how we think data and AI can help the marketplace in terms of overall profitability and risk selection, and how we're leveraging it internally. So I hope you found that useful.
Good news is we have a question for you. So firstly, a thank you and reference to it being a good session. The question is, how are aggregated insights ring-fenced to ensure that data from member X is not shared with member Y?
Yes, so good question. Yeah, all of our data is we never present our information to our members. It's all very targeted to the member himself. So there's partitions within the platform that prevent any data from being shared across the member sets. we take that security really seriously, and we ensure tight segregation between our data sets. So members will only ever be able to see their own data and no one else's data. Really important. Now we do sometimes provide anonymized data at a portfolio level, benchmarking data, which can be leveraged by the whole membership group. But individual members will only ever see their own data, and there's a whole bunch of security rules that have been built around that to ensure that's the case.
Thank you. And let's just have another question popped in. What are you doing to support AI governance, as this is an emerging issue and firms get more and more AI enabled?
Yeah, I mean, that again is a great question. I think the first thing you have to do is to set up your AI governance rules and your protocols. So the first thing we had to do was get a legal team in, and we work with, in our case, we work with Sidley's to help define how we were going to set up AI within our organization and how we were going to construct it. It's not the easiest thing in the world to do, I'll be honest. But once you're through that hurdle, it then opens up the opportunity to then leverage the platforms effectively. So you do need to get I would say expert advice in to help you with that governance structure and that governance framework. And all of the things that you need to do from a legal perspective, both internally and externally, about usage and how the AI is deployed and what you share and what you don't share. We've done lots of education internally to our teams to help them understand the implications of that. That's a good point, and one that it's on your to-do list. If you want to start deploying AI effectively, you have to get that one done first.
Thank you. Let's have a quick check. I think unless anyone is typing, we've still got time if anyone does have a question. I suppose that's one I was thinking of, to give people a little chance to have a think. I suppose from your own view, what would you say is the next step for AI? Is there something that you would say is in the short term?
I think we're really at the beginning of the AI revolution. I think we've only just started to get used to it as an industry, and I think as I said, as part of the presentation, I think the biggest challenge that you have in using it, and this is really less around generative AI and more around the models that can be developed. Because I think there is a place for generative AI, and you can see that. But there's also, the real power for us really is in the generative models, that the large language models you can apply to the data sets. The challenge for the industry, I think, is how do you produce homogeneous data? How do you take all that data from what in many cases is legacy applications and try to then actually run models against it, and that becomes really challenging. So I think somehow the industry has got that as a challenge in front of it, and I'm not quite sure how it solves it. It's a little bit of it has to scrap everything it did previously and start again, which is tough, right? Which is tough. So I think it's going to be deployed in pockets. Some organizations will be able to do it more effectively than others. And those three buckets that I discussed, I mean, I think the workflow one is probably the easier one of all three to deploy. But actually the most powerful ones are the other two, actually, which are applying it at the overall architecture level. It's the enterprise level, and then applying it at the individual member level. Those are the ones that are most powerful, really.
Thank you. And another question for you. It is AI related as well. So like the example of where AI can play the part in the AI process. In my experience, businesses often struggle to paint a picture of where AI can play a part. How can the industry think differently and widen their thinking about data to move beyond structured data into unlocking unstructured data?
Yeah, I mean, as you saw in that example, the audit, we're using unstructured data in that process, and I do think there is absolute value in unstructured data, and if you say you've seen it in that example, I mean, I think the industry's got, unfortunately, we're really at the beginning of this process. I think it's taken. We I think have got a long way to go to leverage the full value of it. I think we're just trying to get our heads around as an industry how effective it could be, and I don't think it's, as I said, I don't think it's anything for us to be scared of. I think it will actually enhance our jobs and improve our productivity and make us more effective about what we do. Um, it's but it is, I think it is very hard for some of the legacy players to be able to do that. It is very hard, and while unstructured data can actually be used and applied in given situations, when you're looking for insights, it's really hard to do that unless you've got some degree of homogeneous data sets you can run against. So I think there's a huge opportunity for new entrants into the marketplace to make a big difference, and I think this tech, that the AI components, can be applied to members or MGAs because their data sets are probably cleaner, and they've got the original source of the data from the retail broker. So there's much more opportunity for MGAs to be much more nimble in this space than I think other players along that value chain. Other players further down the value chain, I think, are going to find it much harder to deploy them in a way that's going to be of value to them. So I think actually members have a unique, or MGAs have a unique opportunity to really leverage AI in a really, I mean, a great example I would say is one of our members who used it to help with risk selection. So they were getting through 1,000 quotes a day, having real difficulty prioritizing that 1,000 quotes into ones that actually fitted their appetite and were able to support. And they used a piece of AI to essentially go through a continual prioritization process of those quotes that were coming in to point them to their underwriting teams, and it constantly adjusted the list and pointed them towards the ones where they actually thought there were the most attractive risks and the most likely to be successful. And that has made a huge difference to both their productivity and risk selection process. And I think that's what MGAs can do. I think that's again another real life example of how it can be applied. But I'd like to be more positive about how the wider industry could use it, but I do think it's very difficult for legacy carriers to make use of this data. We know how complex it is. When you've got, I don't know, some of these carriers have merged upon merged, and I think leveraging those data sets, I think, is pretty difficult with legacy platforms. So it's a really hard thing for them to do. I'm not saying impossible, but difficult.
Thank you. And another question has come in. I read an article saying only 30% of AI initiatives will be successful. Have you had any AI failures, and what have you learned from them?
Well, this is gonna. I feel like I should say we have, but I can honestly say we haven't yet. So we haven't had any failures. So I can't give you an example where I can give you a learning opportunity because all the ones that we've looked at, and maybe it's because the ones that we've looked at have been all low hanging fruit. Maybe there've been ones that have been easier for us to do, and easier to apply, and because we have that the data sets easier for us to deliver against. So I mean, we've certainly applied it extensively across the portfolio, and so far we've been super lucky to not have any failures so far. And long may that continue. I'm hopeful that we will continue in that mode. And as I say, we've probably targeted the easier things to do in the first place, which has enabled us not to have any failures so far. But I have no doubt at some stage we will get some. So I'll gladly share our failures next year, because I'm sure that by then we'd have had some.
Thank you. I think it's any more questions? I'll just quickly check. I think what I can do is do some thank yous. Also want to put in a polite request for people to fill in the feedback form. So that does give people a couple of minutes if they've got that burning question they haven't finished typing. So I am going to literally release at the moment into the comments the link to the feedback form, and would be extremely grateful if people can take 3 minutes of their time. So that's what it tells me. On average, it takes people 3 minutes to complete these things. And share your thoughts with us, share your feedback, and it helps us shape future sessions. So yes, be very grateful for that. And yes, the last but not least is to thank Chris for his time, sharing his knowledge with us. Yes, very, very insightful. And yes, interesting to learn. There seems to be no limits to what AI can do to help us if you choose the right cases and you've got the data sitting there to help you.
Well, thanks, Alice. Thanks for giving the opportunity, and I hope you found it helpful in some shape or form. And happy or always see if anyone wants to reach out, feel free to reach out.
Thank you, and we will share a link to the recording and also the slides, so you'll have that there. And we look forward to part 2.
Yep. Thanks everyone. Thanks for joining. Appreciate your time.
Thank you.